The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 6th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Hey, let's make sure we have an extraordinary one. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal time, we're recording this morning's show between 8 and 9. If you are listening live, we would love to hear from you. You can always give us a call. Phone lines are open, 877-927-6648. If you got a question but you can't call in, don't want to call in, you can always send me an email. Our email system's back up and running, so send that to steve@tfnn.com. And inside the subject heading, if you would be kind enough to put radio show question. Of course, if you're inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a little bit of a, well, not a mixed bag anymore. We've got U.S. equity futures trading to the downside, just slightly. The Dow's off 2 points. I'd say that's slightly. The NASDAQ, that's where the real trouble's at. That's off 38 points, about 0.3%. 4 points for the S&P, 1 point for the Russell. Over in Asia last night, a bit of a mixed bag. 2 points higher for the Shanghai. The Nikkei up 153. The Hang Seng off 60 points. In Europe, it's a mixed bag. You've got the DAX off 7 points and the FTSE up 25. Gold's up 30 cents. Silver 13 pennies. Light sweet crude is trading out at 73.56. That's off 12 cents. And natural gas down 11 pennies this morning. She's trading out at $3.60. 30-year Treasury 127.07 is the print. That's off 10 ticks. 10-year note printed out at 112.25. U.S. dollar index up 527 ticks. I do have a 10-minute delay on that, so if you've got the live feed, you might have something just slightly different. So let's do this here. When you do the early morning show, let me just kind of go through, I guess, what I do from a newsletter perspective. And most of these charts that you will see are included in the newsletter. So just to get a feel for what's going on when I wake up in the morning, which is usually pretty early, I like to go to, take a look at what took place in the international markets. What's going on in the international markets? And this set of charts here. So if we take a look at what went on in Asia, what does all that mean? That the Nikkei was up 153 points or that the Hang Seng was off 60 points. Well, now when we take a look at the charts here, we can easily see what all this means. If we take a look at the Shanghai, that's the upper left-hand panel chart out there, you'll see that today's bar was bar number 8 of a TD9 count. You'll also see that this formed a TD9 count bottom pat. Well, no, it did not. I take that back. The low did not occur on the bar following bar number 9. What price is doing, it's targeting its TD9 count break down area, and that's up at the 33.66 level. The Shanghai should confirm a TD9 count pattern on Monday and should complete the pattern on Tuesday. So the Shanghai, that's something you're interested in trading, is giving you topping signals that should be completed by Tuesday. Now, what price would do or should do is pull back to its oscillator and change line. That's currently printed at 32.69. That number will change, obviously, as price moves up and down. We'll talk about TD9 counts. The Hang Seng today, the Hang Seng, which finished off 60 points, confirmed a TD9 count top. Now, that pattern will complete on Monday. Price will then or should target its oscillator and change line. 25.01 is that price target. The Nikkei, which finished up 153 points today, what that did was that confirmed a buy the D point pattern. There's a bullish reversal candle that formed today, a bullish engulfing candle. And so price here should also target its oscillator and change line, 26.190. Okay, so we know what's going on in the Asian markets out there. We've got tops in the Shanghai, top in the Hang Seng. and a bottom in the Nikkei. In the case of the FTSE, yesterday it negated a TD9 count top. The TD9 count top I'm referring to is one that formed here on December the 1st. Prices above that, you still see Rhodes Momentum Indicator signals being triggered. That's being triggered, those black lines, those black diagonal lines, are what are telling us the pattern is present at the moment. And therefore, a bearish reversal candle at day's end would confirm a Rhodes Momentum Indicator top. Short of that, price inside the FTSE should continue to move higher. If we take a look at the DAX has a sell the D point pattern out here, and that took place, when it got this falling window out here, a pattern, a gap to the downside back on December the 15th. Now, price above its oscillator and change line, and it's green, and so likely that high is going to get tested or targeted. That's a December 13th high. That's up in the 14,675 area. So now we take a look at Europe. Europe in the DAX. And the DAX is important because the DAX and the NASDAQ composite kind of emulate each other out there. In the case of the DAX, if this were to bust through that Rhodes Momentum Indicator top, and to bust through, what I mean by that is price would have to close above 14,675.84 to negate the pattern that is out there. If price did that, then that would be sending a signal to us about our NASDAQ, or likely a signal about our NASDAQ. Now, I've got from the U.S. markets out here, just general markets with regard to how I start my days. Take a look at what's going on inside the ES Mini. And inside the ES Mini, there's a consolidation breakdown that formed that gives us a price target somewhere in the 37.45-ish range out there. But with inside the price objective of that measured move of that consolidation breakdown is another consolidating pattern out there. So what we do know is that red oscillator and change line has acted as resistance. If price is able to overcome that level as we speak right now at 8:12 in the morning is 38.61. If price is able to overcome that, then we should see at least a move up to the top of the current consolidation. And that would get us up into the 39.20-ish type range out there. If we take a look at Goldilocks, gold yesterday formed a bearish engulfing candle. That confirmed a Rhodes Momentum Indicator pattern. Right now, price is below the oscillator and change line, and if price remains below that level, by the way, is 1843, that would then signal at least a pullback to the top of its profile, daily profile that is, and that's at 1806. If we take a look at the U.S. dollar index, and here's the big culprit, the U.S. dollar index has a nice Rhodes Momentum Indicator bottom. It's actually been confirmed twice. First time was on December 15th. That's at the bullish engulfing candle. There was another bullish engulfing candle, bullish engulfing candle yesterday, a bull sash candle 2 days ago on the 3rd out there. So if there's any question in anybody's mind whether or not the U.S. dollar index is attempting to form a bottom, the answer is it absolutely is. Now, when we take a look at the U.S. dollar index on my charts out here, sometimes white background charts, these are charts produced by NinjaTrader System, are different than the E-signal charts. Those are the black background charts. And this is one of those instances where we have two different sets of profiles. If we took a look at a set of profiles on the E-signal system, we are in a complete breakout mode for the U.S. dollar index. In fact, that's what we're going to say as we speak right now at 8:14. The next resistance level for the U.S. dollar index is up at 105.68, and above that, 106.98. So that's just kind of an overview of the general markets out here. We get back from this break, we're going to go take a look at coffee, and then we're going to take a look at the NQ. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. It is 8:18 in the morning. We are recording today's show between 8 and 9. If you're listening in at the normal slot, between 11 and noon, we're going to make today's show as pertinent as we can. Of course, in the next 12 minutes, we're going to have the jobs numbers, so we should see maybe a little bit of fireworks out here, so we'll try to analyze those live as we see them unfolding. Right now, what I've got up here are the soft commodity charts out here. We're going to take a look at coffee specifically in a moment, but as long as we're going to take a look at that, we might as well take a look at what's going on with wheat. Wheat formed a nice TD9 count top, did that a few days ago, and price pulled back pretty significantly yesterday. Now, that pullback was nothing more than a test of its breakout level of support at 744.75. If we take a look at soybeans out here, soybeans have a sell the D point pattern. Price is below the bottom of its daily profile. That suggests lower price. If we take a look at corn out here, don't really have what the topping pattern per se inside of corn. What we do know is price is below red oscillator and change line and the bottom of its profile. So that may want lower price as well. We'll come back to coffee. That's to the lower left. If we take a look at sugar, sugar today will form bar number 8 of a TD9 count. Price says it did form a TD9 count top. Formed a Rhodes Momentum Indicator top. Price is below its breakout level of 18.31. Nonetheless, you could get a bottom inside of sugar between today and Tuesday. And lastly, if we take a look at cocoa, cocoa has a confirmed Rhodes Momentum Indicator top. Price is below the bottom of its daily profile, which is a bullish structured profile. This may be forming an A to B equals CD to the downside. So that's what's going on as far as an overview of the soft commodities. But we're going to go focus in on coffee. The reason we're focusing on coffee is one of the emails that came in a couple days ago when we were having technical problems was about an individual who wanted to take a long position inside of coffee. So we've got the coffee charts up on our screen. For the monthly and the weekly, I've got to use the continuous contracts out there. Just not enough data for me to pull together from the March contract. So if we take a look at a monthly time frame chart out here, coffee, which is trading below the bottom of its bullish structured profile, could over time be targeting 118.75. We're only at 157.90. Now the confirmation that that's what coffee wants to do would be a close below the weekly TD9 count bottom. That's where price is trading into right now, is that bar. So the level you'd be watching is 150.60. If coffee closed below 150.60, then that's going to signal that move back to the 118 level. If we look at coffee on a daily time frame, it has a Rhodes Momentum Indicator bottom. And what has formed since then is a sideways consolidation. So If you're interested in taking a long position inside of coffee, you're going to do that via the Joe ETF. Then what I would do is I'd wait for it, see if this thing's going to pull back to the bottom of this consolidation. What you're looking for is somewhere right around 154.15. Don't use that to the tick out here. If we take a look at a 60-minute chart, the only chart that, well, there's 60-minute and the 5-hour chart are the ones that have potential bottom signals right now. Those bottom signals being TD9 count. So the 60-minute, the hourly chart at 9 o'clock is going to complete a TD9 count bottom out there. That may just lead to an intraday rally that could get priced up to the 162 area out there. I'm not saying that's what's going to unfold. I think you'd watch. You're also in wave number 7. That's letter G out there. So you could see a 60-minute bottom that forms. The 300-minute or the 5-hour chart out here, this next candle doesn't complete until, I think it's 10. Let me just make sure. I'll give you the right. This candle finished, 9:15 out here. Yeah, so in about almost an hour, you should get a confirmed TD9 count bottom. Now, that bottom can't come on the bar following bar number 9. So it's possible that we could see lower lows. So the question is now a time to enter a long position inside of coffee? And I just don't see it. Prices, it could be an easy trade. And that easy trade, taking that position somewhere right above 150.60 out there. And if you get a close below 150.60, that could be a signal that it's time to jettison that position as you would anticipate lower price, like that 118.75. So that's what's going on with the Morning Joe out there. So I hope that helps you out. Thanks much for waiting. Let me a couple of days to get that review. Lastly, let's just finish this off again. Take a look at the U.S. dollar index. What's going on inside the other currencies as well? So if we take a look at the euro has a sell the D point pattern. You can see that price found resistance at its oscillator and change line. It's below yesterday's low. That should lead to lower lows out here. If we take a look at, so it's going to weaken, put strength in the U.S. dollar. If we take a look at the Japanese yen, as it moves higher on this chart, which has a confirmed Rhodes momentum indicator bottom pattern, as price moves higher, the U.S. dollar index gets stronger because this is weakening. When the Japanese yen on this chart is moving higher, that is weakening against the U.S. dollar. So the euro says U.S. dollar is going to strengthen. The yen says the U.S. dollar is going to strengthen. The pound is in an A to B equals CD to the downside. That A to B equals C to the downside gives you a price projection of 116-ish area or 118 right now. This is weakening. The U.S. dollar index is strengthening. Those are really the only three currency pairs that we really need to take a look at out here. Again, the U.S. dollar index on the bottom right. It has different profile levels than those that I have inside the e-signal system. Doesn't matter. We use both sets of profiles. 105.68 would appear to be the next price target. But if we're looking for tells as to what the market might want to do, and to the extent that we're going to use the U.S. dollar index as a benchmark for what the market's intentions are, well, the U.S. dollar index has clearly given us a signal that it wants to move higher. Now, it's possible that the jobs data that comes out in 6 minutes could change things, but likely not. But right now, you've got the three major core currencies that represent over 75%, I believe, of the U.S. dollar index that are all saying the index, U.S. dollar, should get higher. And that really leads us into our next question out here. The next question coming in from John from Philly, who wants to know, is the NQ, is there any scenario that we see a potential sharp decline coming inside of it? So to answer that question, the first place that we will start here is our correlation chart. Now, this is a correlation tool that correlates two different instruments. In this case here, what we're taking a look at is the give me a second here. My apology. I was trying to multitask, and I have to multitask here because what I have to do is just to make this smooth, and apparently not too smooth there, Steve-O, is I've just got to change a data feed for the next set of charts. Okay. So I've got that going. So now back to this chart here that we're looking at. So the bottom panel is showing us the effect of the correlation between the two. And here I'm using a 5-day time period. Let me just simply pull up the actual correlation tool. We'll pull it over here. You'll see the correlation. I'm looking at the NQ versus the U.S. dollar index. And what I'm using is a 5-day period. It's a pretty short period. Typically, you would use, just to kind of get an overview, you might use a 20-day period here. So let's just simply add 20 days. See what that does out here. And what we'll take a look at is when lines are below the zero level, that tells us about a inverse correlation between the U.S. dollar index and the NQ. when things are above the line, it says that they've been moving in the same direction. Same direction. So the U.S. dollar index is moving higher, and the over a 20-day period of time, the NQ apparently is moving higher. Now let's come back to this. Let's go put this back on our short-term time frame. Let's move this back to a 5-day period out here. And we'll see that in this case, we take a look at a 5-day period here, that for the most part, what we have is an inverse relationship. Well, we just took a look at the U.S. dollar index out here. This is a continuous contract that I've got on the bottom portion of this chart, and it's signaling that it wants to move higher. So the first scenario, John, that we could anticipate with a sharp move lower inside the markets, and specifically you asked about the NQ, would be, well, right now this correlation is still really in effect. So that offers one possibility that could lead to that sharp decline scenario. Steve Rhodes with TFNN. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. The jobs report numbers are due out in just a few seconds of time out here. We're kind of leading into the NQ. So those we should see the fireworks, if there are any fireworks here. We're just going to switch over right now to our, there are fireworks. We can see those about, those have already taken off. So let's, let me get back here. We can take a look at a bit of fireworks. So we're seeing at least the first knee-jerk reaction at this stage here. I don't see the numbers, but we do see the markets responding. And now you've got equity futures that have moved to the upside fairly significantly at this moment. The jobs numbers, I don't have the number. Maybe somebody's got it inside the den. I don't know what the number is. Boom. So boom to the upside, job numbers was pretty low. I guess that would be an indication of the market's moving higher. Again, I don't have those numbers, but we're just simply taking a look at the results thus far. Now, we want to let things settle down just a bit out here, and we'll do that. So we're going to first go to the NQs question. But right now what we see is we see a change in the equity futures. We see now I've got a 10-minute delay on the U.S. dollar index. So my apology there. We really won't know how that's responding until about 8:41 out here on my system. Maybe somebody's got a live feed for the U.S. dollar index, can tell me what it's doing out there. Gold is basically unchanged, as is silver. So the big movement out here right now is in the equity futures market. So let's leave this for the time being out here. We know what at least the initial response was. Let's go back and try to answer that question with regard to that came in from John. Is there a sharp decline scenario for the NQ that we could envision? So to do that, we're on this black background, so let's stay here. So here are the QQQs. So let's first go over to the QQQ series ETF. Everybody typically has access to this, and they can see what's going on. So the first thing that we know, we take a look at that weekly time frame chart. It shows us the descending price channel that the Qs are in, or the NQ out there as well. And from a weekly perspective, the NQ has closed below, or is trading below the bottom of its bullish structured profile. So closed today between 265, below 265. 62 would at least be suggesting a test of the recent low out here that took place in October. Now, there was volume of 367 million shares. So far for the week, we're at 135. We know that we're short one day, which is Monday. If we add 50 million to it, about the average volume or so, that gets us to 185. Another 50 gets us to about 235 versus 367. So from a volume perspective, John, we have price pulling back into a really important swing point, because that swing point in the Qs happens to also be a TD9 count bottom. And it's doing so with light volume. So if it was pushing with volume, then we'd say, well, it's definitely going to go test that area, and it could, in fact, break it out. If we look at the daily time frame, the QQQs yesterday found support at the bottom of its daily profile. The bottom of its daily profile from a daily time frame out here is out at the 261.24. So it's got support. Where there's the possibility of that move lower inside the Qs or inside the NQ is that on a monthly basis, what we have, we actually have a confirmed monthly A to B equals CD to the downside. And price right now remains below that B point, which is 269.28. So the B point of the A to B equals CD took place in the month of June of 2022. That low is 269.28. And during that month, there was 1.35 billion shares that traded hands. When price closed below that low, it was September of 2022, when price closed at 267.26, so 2 points below the B point, and it did it with more volume, 1.37 billion versus 1.359 billion out there. So you do have a confirmed A to B equals CD on the weekly basis. Now, the cool thing here, when we go take a look at the monthly, the weekly, and the daily timeframes out here, John, the market is going to reveal the answer to your question to you. Stevie can't. All Stevie can really do at this stage here is just narrate the charts. But the cool thing about narrating these charts, we take a look at the monthly time frame. Here I show that A to B equals CD to the downside. But what this chart also shows us is a TD9 count bottom. That TD9 count bottom, that's the June, I believe that's the June bottom. Let me a second here. Apologize. That is the October, that is the October 2022 low out there. So inside the NDX 100, which is what I'm taking a look at, that has a TD9 count bottom. So too does the NQ on a monthly basis. So you can see we've got this stacked up. You've got the cash indices up top. You've got the NQ charts below that. So we can see what's going on, because we really want to take a look at both. And so inside the NQ, you've got a TD9 count bottom. So the level to be watching there, and a TD9 count would be negated. And if it gets negated, that tells us that price wants to move lower, or should move lower. And that's what opens up that door to a 194.99 price target on that A to B equals CD to the downside for the Qs. But price, in order to get that, we need to see a close below this TD9 count. Now, you need to see a monthly close below that level. That level, by the way, is 10.598 for the NQ. Well, turns out on a monthly basis, we have a TD9 count bottom as well. This one formed on bar number 8. The monthly formed on bar number 9. Does that matter? No. There's also a Rhodes Momentum Indicator bottom on a weekly time frame for both the NQ and the NDX 100. We talked about that yesterday. And we didn't talk about the NDX. We took a look at the S&P 500. We'll do the same thing here for the NDX from a weekly perspective. But you got that TD9 count. And on a weekly basis, if price were to close today below 10,598, John, that would add to the idea of a sharp decline. Not until that occurs, because we've got two confirmed TD9 count bottom patterns out here, will we be able to suggest that that sharp decline scenario is truly in play out here. And on a daily basis, well, guess what we have inside the NQ? We've got a TD9 count bottom. That formed out here on the trading day of December the 28th out there. And so as long as price stays above that low, that's going to be that same price point that we just took a look at on the weekly time frame. So I'm not going to, and again, that level should be 10,598 out there to be watching inside the equity futures. Now, somebody might say, hey, Stevie, I don't have equity futures, but I can take a look at the index, the NDX 100. So what's the level to be watching for there? Well, on a weekly basis today, what you'd be looking for is a close below 10,440.64. If you don't get that, we still have bottoming patterns that are in place out here, and that would hold true for the daily time frame chart as well. So that's what you'll be watching for. You'll be watching for closes below those levels. If you get that, and knowing that the U.S. dollar index appears to be breaking out and moving higher, then that adds to the scenario of a sharp decline. So what's really cool about, again, the setup of these charts here is we've got confirmed bottom patterns on the monthly, on the weekly, on the daily. Of course, the daily would fall first, but today being a Friday, it could be both the daily and the weekly that would fall. And not until that happens will we really know the answer to your question out there. So I do hope that helps you out, and I hope that answers your question. And thanks so much for taking the time to write in earlier. So let me see if there's anything else out here. No, nothing else that I see of that we need to really pay much attention to. So let's close these charts down. And let's close this. Excuse me. And let's open up. Let's go open up the NQs on the more shorter term time frame. So let's get my let's get another 8-panel set of charts to populate here. This is going to take a moment because we're just simply starting from scratch here. And then once these populate, well, this has got the ES Mini. So let's just stay with the ES Mini for the moment out here. Once these populate. Now, what I'm going to have to do, because I've got some type of technical difficulty going on. So when these charts here populate, I've got to reload the historical data. It's a real bummer. Haven't figured out what that is, what's causing that. But right now, what you're looking at in these charts here is not accurate, but it will be momentarily. So we get that going on the intraday charts. I have to do the same thing for the daily time frame out here, and then we'll be good to go. So we see that spike to the upside. The spike to the upside so far after the jobs numbers out there. And so I'll get this all set up, and then we'll take a look at it when we get back to this break. Steve Rhodes with TFNN.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we're taking a look at the multi-panel set of charts here for the ES Mini. We can see that if we take a look at the shorter-term time frames, we'll take a look at the 30-minute chart out here. What you've got is a really nice Rhodes Momentum Indicator bottom, a gigantic candle at this stage. Now, this candle's not going to complete for another 18 minutes out here. What price is doing is taking on resistance. And the resistance is at 38.4750. That resistance established by the TD9 count breakdown level. And you can see at 38.54 on the 60-minute time frame chart, you also have a Rhodes Momentum Indicator bottom. This TD9 count is not going to take effect at 9 o'clock. Doesn't matter. You've still got a Rhodes Momentum Indicator bottom. And you've got that resistance at 38.54. So 38.54, and you got 38.60 on the 120-minute time frame chart. And then you have 38.79 on the 5-hour chart. So the first key area, 38.4750. The next key area is 38.54. Above that, 38.60. And above that, 38.79. Those are the levels to the upside to be watching today. On a daily time frame, what price has done, it's tested so far and rejected its oscillator and change line. That is currently printing at 38.65. So that becomes another number. Now, that number is going to change a little bit, but if price does close above the daily red oscillator and change line, which it has not done for quite some time, and that's been tested and rejected all week long, closing above that, well, that would suggest a move that you could see with the ES Mini getting all the way up to 40.67. Am I making that call? No, I'm not, but it certainly becomes a possibility. But first, the price would have to close above the red oscillator and change line. So we're going to call that the real level of resistance. It's been tested and rejected the last 4 days. So the ultimate level that price would need to close above today is 38.65. If price closes below the area of 38.0450 today, that's going to signal this move back to the 37.50 area. So this is what's going on. We take a look at the intraday charts here for the ES Mini. We've got a couple of requests that have come in, so let's get to those first. When I say first, let's get to those right now. So the first one is coming in from, let me just get rid of the rest of these that are out here. First one is coming in from Hector and Patty. Good morning, Hector and Patty. Happy fabulous Friday to you. The XLE Gartley buy pattern. Can you please review this on the show? So absolutely. So with regard to the XLE, you've got the A to B equals CD pattern out here. So we take a look at that, and there's an extension on the C to D leg. So A to B, pretty easy to identify. We'll just simply draw that in, and then we're just simply going to go ahead and take this line and move this over to the C point out there. So you can see the C point. And what happened is this made an extension. Looks like it might have been a 1.618. A to B equals CD to the downside, and it was confirmed. This is how Stevie does it. A to B equals CD patterns. The reason why I do that is because when I started learning this pattern here and I started trading it, I started trading this the one-to-one. The one-to-one A to B equals CD, period, end of story. And then when you get your R's handed to you, you go back and you take, well, you know the pattern works, so what is it that I was missing? And what I was missing was a confirmation of markets that want to move higher or lower. When does the cavalry arrive? When do the sellers show up? When do the buyers sell up? Well, the buyers will at least, that's what, and each day they go to work and they punch the clock, so to speak. That clock is between, as you know, 9:30 and 4 p.m. out there. So they punch the clock, and their role is to produce bullish or bearish reversal candles, especially when we get to pattern completion areas. And that's one of the A to B equals CD patterns. 60% of the time, it does make an A to B equals CD or thereabouts. The other 40%, it does something else. So the idea was I spent quite a bit of time analyzing and understanding when we get more than a one-to-one A to B equals CD. Well, let's not belabor that point at this stage here. What we do know is on the trading day of December 12th, what price did was it confirmed a Gartley buy pattern. It confirmed a buy the D point pattern. What's been taking place since then, Hector and Patty, is really more of a consolidation than anything else. A consolidation on the daily pattern would look like this. We'll go draw in the rectangular box, but we'll do it as soon as we can find the right tool out here. So here's our rectangle, and pretty much looks just like this. So you've got what you've got going on inside the XLE as we speak right now, really on a daily time frame, is a consolidation pattern. Now, in the pre-market here, the XLE is trading out at 86.82. It closed yesterday at 85.93. So price may be making its way up to the top of that consolidation, which is going to be in the vicinity of the 88.36 area. The move higher is supported by the weekly chart. The weekly chart here shows that the price is above the top of its profile, but its key resistance level is going to be 89.23. That's its oscillator. I'm sorry, 89.23. That's its oscillator and change line. Again, we're printed at 86.82. So look for that to be a level of resistance. On a monthly basis, you still have that TD9 count top that is in place out here, but price above its green oscillator and change line, price above the top of its profile. Those are then that neutralizes the bearish signal of that TD9 count top. So neutral on the monthly, bullish on the weekly, consolidation on the daily. The XLE, if we take a look at a 30-minute time frame chart, this did form a TD9 count top. Yesterday, it did that at the 2 o'clock time frame. So it closed above 86.40. We're trading at 86.78 right now, but it closed above 86.40 on a 30-minute bar. So that would be the 10 o'clock bar. Is going to suggest a move up to 87.36 out there. So Hector and Patty, I hope that helps you out with regard to the Gartley buy pattern. If not, right back to me, and I will find a different way to answer that question. So have a fantastic Friday and weekend, and thanks so much for getting up early and sending your requests. I know you're out on the West Coast out there. The next request coming in from Tim M. Then Tim M wants to take a look at the Eastman Kodak Chemical, or Eastman Chemical, I guess, not Eastman Kodak. Could you please take a look at Eastman Chemical? It has hit the 0.68 retracement from the August 16th high on 3 occasions. Is the risk reward worth a long position here? Thanks and have a great weekend. So if we take a look at Eastman Kodak, and what we're looking for is some kind of a bottom pattern out here. And I just don't have it. That does not mean that it hasn't bottomed, and especially does not mean that it hasn't bottomed because price is above its daily green oscillator and change line and a new profile that formed yesterday. So if you'd ask me, is Eastman Kodak in a bullish formation? The answer is absolutely. Where is price likely going to go target? Around the 91.47 level. It has a couple of swing points at the price point area of 90 bucks even Steven, and 88.05. So 88.05, 90, 91.47 become your price target areas out there. As price approaches the swing point is going to be November the 11th. In November the 11th, there was 1.4 million shares. Yesterday, as an example, what this did was 1.1 million shares. So, watch as price. It has not. I take that back. So price was getting into that swing point. It did it 2 days ago, and it was with volume of 1.1 million shares. So you got 1.1 going into 1.5 basically. So you are moving up with light volume. You're likely to find resistance at that $90 area. If I look at the weekly time frame chart for you, and looking for a bottom pattern. I most certainly see an A to B equals CD pattern. What I'm really missing, though, is the bullish reversal candle. Doesn't matter at this stage of the game. Price is above the top of its profile, so that's bullish out there. And on a monthly basis, do I have a bottom pattern? I don't. Just have a price with inside its profile level. So your question was, is now a good time? Is the risk reward we're taking a long position here? I don't think so. I don't think so. Steve Rhodes with TFNN. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. So you got the Dow Equity Future up 369 points right now. NASDAQ is up 134. The S&P is up 45. The Russell's up 25 out there. Gold's up $15. Silver's up 45 cents. Platinum's up $13. U.S. dollar index is pulling back a bit out there. Again, I've got a 10-minute delay on that. Let's go to our next question coming in from Brent in Martinez, California. And Brent wants to take a look at natural gas. The question is, happy, fantastic Friday, Steve. Well, back at you, and thank you. And have a fantastic weekend. It is looking like the expansion of the C to D leg for natural gas is in play. Absolutely. Would appreciate your analysis. Thanks for your help. Have a great day and wonderful weekend. You do the same thing, Brent. So what Brent's talking about, if we take a look at the A to B equals CD pattern, you can see it on the daily. We're looking here. This happens to be the February contract. We're getting ready to roll over into March. But nonetheless, you can see the A to B equals CD pattern. We can see that price along the left side of that C to D leg. That's the stronger side. That usually indicates more than a 1-1 A to B equals CD. That next price projection level is in the 268 area. This is a price projection tool. That does not mean that price is going to get exactly to that tick out there. Because we are in an A to B equals CD pattern formation out here, what would you be watching for for is some type of bullish reversal candle. If we get that, that's going to confirm a buy the D point pattern for natural gas. Now you've got A to B equals CD patterns both on the daily and the weekly. Of course, the weekly we need a lot of work in order to generate a bullish reversal candle. That is not likely going to happen today, but you'd be watching for the daily first. So those are the A to B equals CD patterns. If we switch over and take a look at our multi-set of time frame charts out here, and again, this one's going to show us the monthly, the weekly. So on the monthly chart, we can see we are now trading below the December 2020 low is where price is trading below. If we look at the weekly time frame chart, other than the A to B equals CD pattern we already looked at, no bottoming signal. The next price objective here is 321. That is a TD 9-count breakout level. On the daily time frame chart, we're in bar number 5, so no TD 9-count bottom present here, no Rhodes momentum indicator signal present. So yeah, this is suggesting lower price. Now we switch over to the intraday charts out here. There's got some, you can see that it's stretched. So from the 30-minute to the 5-hour chart, things are stretched out there, but still no bullish reversal candles to confirm any bottom. So yes, Brent, it does look like price is going to target the 268 area out there. Folks, stay tuned. Tommy O'Brien with the morning market kickoff is up next. If you're listening live, stay tuned for all the great programming. And I'll see you on Magical Monday. Have a fantastic Friday, a wonderful weekend. Take care, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.